Welcome to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon. And today we're going to have a live trading room open to trade stock and options using TradeSpoon technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. All right. Angelique, welcome back. I'm doing well. Michael, Faust, Patrick, William, Robert, Raymond, Phil, Dad, good morning. John, Carmen, good morning. Carmen, thank you for participating in coaching program. That's great. All right. Happy. All right, let's start. Welcome to TradeSpoon and Yellow Tunnel. Today we're going to have a live trading room open to trade stock and options using our artificial intelligence software. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. This is my brief bio. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between TradeSpoon and trading block on the bottom of your screen. All right, important to go over pre-market routine, right? I encourage everybody to have a pre-market routine and keep a journal. In your journal, I always write down, first rule is cash. So I'm reviewing to make sure that I have more than 30% of my portfolio in cash. You know, when the VIX is been averaging around 30, so 30, I would say 50% of the portfolio should be in cash. We are trading in the bear market, right, by definition. We're trading in the bear market. Rallies will be quick and kind of violent and fast. Sometimes you can, sometimes you cannot catch them. And then overall market grinds down. So it's important to preserve the cash. Preserve the cash. You know, at some point, market will reach or will start the bottoming process. I don't think it started yet, but at some point we will find, the bottoming process will start, and at that point you do want to have, I would say 50% of your portfolio in cash to deploy or more, based on your risk tolerance level. So that's one thing I would always review, kind of zoom out and have a long-term perspective on market, right? Right now, every time you turn on TV, it sounds pretty horrible, but we know that over a long period of time, market always continue, global economies continue to expand, and at some point it will rally. So we need to make sure that there is enough cash at that point. Second one is portfolio drawdown. This is very important, again, in terms of preserving your portfolio, making sure you have enough cash. I propose to have no more than 4 positions. You've seen in the past couple of weeks in the headline news I'm turning on Bloomberg, bear market in commodities, right? So first 6 months, bull market in commodities, next 6 months, bear market in commodities. So you can see that whether it's consumer staples or oil companies, they all have experienced 20 or more % pullback. So at least for the next 6 months, arguably for the next 12 months, all the positions will trade in high correlation to each other. There will be some divergences for a short period of time, maybe a couple of days, couple of weeks, couple of months, but at some point, they will all end up, they will all move in the same correlation. So in the bear market, to manage positions, easier 4 positions. You can see a lot of people only trade now ETFs or indexes, right? No reason to figure out if Microsoft is going to outperform JP Morgan. You just you trade liquid names, high volume liquid names. If you prefer to trade single positions, it makes sense. You're comfortable trading Apple, you've been trading it for 10 years, fine. But again, I encourage you to consider having only 4 positions at a time, maximum loss of 2.5% of account value per position. Let me know if you guys have any questions. All right. John, congratulations. 14 nieces. That's great. Bob, present. All right. Ted, does market price in 50 or 75 basis points? I think it's 75 basis points. But again, today, Fed meeting notes are for the months of June. So in theory, there shouldn't be any, or there probably will not be any positive or negative surprises, right? Because we still didn't get CPI, PPI data, and the July decision will be done in end of July. So today, Fed meeting notes for the months of June probably will not spark volatility in the market. Probably, I guess. We'll have to wait and see unless there's some kind of new information. But just keep in mind this is for the months of June. Brad, good to see you. Good to hear you. It's good for you to be here. All right. So 2.5% of account value position. That is the most difficult decision, right? How do you determine 2.5% of account value? Again, I would encourage you to look at the spiders. If you're a day trader, you're short-term aggressive trader, clearly 372 is where we spent the last 2 weeks, right? We retested it yesterday. We retested it last week. Let's see what the TradeSpoon model says. 374. So the model sees 374 support. Overhead resistance is at 384. We are trading above 380. Right, 380 has been a reactionary low for the month of May. Right, so we're trading right above that point, the May low, around 379, 380. We spent a few days below that level, a few days above that level. I guess market participants are looking for directions, right? There's enough information for the bears to make their case, and looks like there's also good arguments behind the bulls, right? So the kind of a trench war around 380, and that's where the market spent past couple of weeks looking kind of for direction. We do have ISM numbers, right, at 10 a.m., right, and job openings, right, and then FOMC meeting. So could, market remains volatile, right? VIX is around 30, so you can have days like yesterday where the market is down 2% and then closes, Nasdaq was down 2% and then closed 1.5% up. So huge swings in the market. So the 2.5%, again, day trader, I would put a stop order right below 372 if you're short-term day trader, right? If that level takes out, I mean, I would give myself maybe a little bit more room, maybe put like 369, right? That you can clearly see if we drop below 370, then most likely we'll retest 360 level. But that's where you be your stop level. So if you're if you're day trading, I would risk less than 1% of my account value. If you hold in position overnight, then 2.5%, right? So if you bought at 381 because you think market will retest this downtrend, your stop level is 370, right? So it's 12 points. 2.5% of account value is 2.5%, right? So $10,000. This is the most important calculation. I believe if you do this every time, you do not exceed 4 positions, then everything else will follow through. So $10,000, 2.5%, that's $250. So if you're day trader, aggressive day trader, you're trying to, catch this rally, then 372, 12 points to the downside, that means maybe 20 shares, right? 20 shares times 12 points. And I encourage you to break this apart, right? Market could drop 2%, can rally 2% just based on ISM numbers. So, you can buy 10 shares here and then you buy the other 10 shares here. This way, you know that if it drops below 360, 370, you're down less than 2.5%, right? That should be the calculation, and you don't have more than 4 positions. This way you have to make this decision every day. So if you don't like short-term day trading, I encourage you to consider this is kind of the line in the sand, right? 360. So then it would be 5 points. You would put 5 points here and 5 points here, 5 shares here and 5 shares here, because you have twice as much losses, right? So this is scenario 1, you're doing aggressive short-term trading. Scenario number 2, you're doing longer-term trading. If this level doesn't hold, 362, next level is around 350, right? Around 350. That's the next support. Very important support. A lot of people calling for 350 as the bottom or close to the bottom, but that's where I would put the stop loss. So that's the most important calculation, right? And depends on how aggressive of a trader, that's what I would do. On the upside, same thing. If you're shorting spiders at 383, right? If you're shorting the spiders at 383, you clearly, right, you have 2 stop levels. One is the reactionary high from last week, around 394, right? If we're trading above 394, the next level is around February low, right? So around, call it 409, 408. So same thing, you can short, let's say it approaches 390 and you think that the market is not going to continue going higher, then you short, 5 shares here, and you short 5 shares here, right? And that's your stop levels, right? If the market continues to go up, then above this level, then most likely it will hit this 440 level, right? But that's how you would, whether you're long or short, when the trade goes against you, this is the type of calculations you want to go through. Block Zero, welcome back. How's the short position? 380. That was a good trade. Market did drop. The Wheelie, welcome. Then Guitars, welcome, guys. If you can. All right. Thank you, Yellow Tunnel. All right. Thank you for participating. So, okay. So 2.5% for position is very important. Wait for 2 to 3 days to confirm the trend change. Right now, if you look at the stock forecast toolbox, right, the short-term trend is to the upside, and it's been like this for the past week or so. So we do have a bullish momentum for the next 10 days, right? This is a 10-day forecast, not long-term forecast. And 380 is the important support, right? We've been fighting for the support between bulls and bears. So I would say if we're above 380, bulls are in control, right? And model supports this. If we drop below 380, then bears are in control. And the reactionary low is 374. Model does see that we will trade above 380 and potentially, get as close to 389 as possible, right? And I mean, that's the next overhead resistance, right? I assume bulls are gonna spend a little time trying to break through this level. So that's the 10-day forecast, right? 6 months forecast. Model recalculated the issues again. Last month it was -5%. Now it's -10%. Why? Because May and June market undershot the predicted low by 5%. So you can see model is moving the target price, the predicted low for this year, is close to actually 300, right? And you can see it also by the analysts, right? We started the year, everybody said we're going to end up 480, then, as market sold off 440. Now, average analyst, targets 380, right, as the year-end price target, right, around 380. Well, if it's year-end around 380, then obviously it has to get a lot less, before it rebounds to 380. So unless we trade above 360, unless we break above 413 this month, then that's the path of least resistance for the next 6 months, right? The path of least resistance for the next 6 months is probably, definitely the retest 350 level, or potentially undershoot to 300 or 320 level. So I would not be surprised if year end we see a 320 or 300 print, unless macroeconomics change, right? And for now, we'll see. Main observation is, again, 10-year yield continue lower lows, yield inversion, right? 2-year yield is higher than the 5-year yield, higher than the 10-year yield. I don't know what the 30-year yield, but this is yield inversion, right? Sign of recession, right? First 6 months, everybody was concerned with inflation. Now everybody's concerned with recession. So it's going to be hard to change people's mind, right? Just like it was hard to change people's mind on January 1 that we are probably going to, trade in the bear market. It took 6 months to change that mindset. It's going to be very hard to change the mindset, in the opposite direction, right? That we are not, trading in recession. I would say more than half of market participants probably at this point think we are heading into recession, and that's reflected in the yield inversion, and also dollar, right? Dollar is breaking out, 20-year high, right? Euro is basically at parity. It hasn't happened since 2002. not even 2008 recession, but we're talking about 2002 recession, right? September 11 and the so 2008 we were at 89, so dollar didn't move that far. But in 2002, this is the last time we were at 107 level in 2002. So probably dollar continues to go higher. If I have to guess, we'll probably get close to the 120 level eventually, right? Not in the next months, but in the next 6 months, right? The next 6 months. But now that's a big issue, especially going into the earnings. I assume most companies will blame strong dollar for weaker earnings, right? That's the concern. So this is, so people are hiding in TLT, right? TLT continues going higher. This is one of the calls we've done in the past couple weeks or even months, maybe. Stronger treasury, reflection of this new thought process, new theme, that stronger, weaker yield, stronger treasury. So money will rotate into treasuries and money will rotate to a dollar. All right. So I would keep a look on the currency market and treasury market. Short-term treasury is down, right? The idea that inflation is easing, right? Then potentially Fed might not increase the rate hikes at the anticipated rate. And you can see that, technology has been outperforming short-term, Any questions? Block Zero, Dwili. 10 guitars. Let me know if you guys have any questions on Discord. Thank you, Albert. So Carmen, long-term, the long-term, this is next 6 months, right? Till the year end. And it uses open-close. It uses open-close, low and high. So stock forecast toolbox doesn't look at recession. It doesn't look at, it learns, and it's artificial intelligence. It learns and trades on these 4 data points. If it's monthly prediction for the next 6 months, then each data point is 1 month. If you're using, 10-day forecast, then each data point it learns is a day worth of data. And you have 4 data point, open, close, low, and high. So it just looks at the price action. Technical analysis, and at least at this point, technical analysis is probably the most important. Fred, right, the 6 months model doesn't only change on the 1st of each month. So it's not going to change till August 1st, no matter what happens in the months of July. And the reason is because, it learns and trades on a data point. Each data point is 1 month. So we don't want to learn on impartial data, right? And same thing goes for 10 days. A lot of people ask, why don't you rerun this, in the middle of the month? Well, you can rerun this in the middle of the month because the data point is not going to be complete. And we don't want to do that, right? That's not accurate. Still see the kind of weakness moderating your personal stance on the path that will change it all personal view. So the path, so Fred had a question, if I interpret this correctly, that, what are the signs that, model is changing or moderating? I would look at the low and high, right? Usually, as long as the stock market trades within the low and high, right, that means there is no trend changes, right? Assume the month of July ends up where we're not going to break 360, we're not going to break 414, then in the months of August, the low will be lower and the high will be lower, and that path continues. If we're going to break 360 again, let's say by 5%, right? Let's say we're going to reach 340 or 350 in the months of July, all it means is the sell-off is going to accelerate, right? The sell-off will accelerate. If we're trading within the range, then it doesn't. Let's say we're going to trade at 440 in month of July, right? We're not going to revisit 360. The rally will continue and we're going to reach 440. Well, then this negative trend is going to deteriorate, right? It will still probably be, 1 month is probably not enough to change the overall long-term trend. 1 month is not enough, but the vector is going to get substantially weaker, right? And the vector is the force behind the bulls, right? The force behind the bulls, so bears will change. What's the best way to short the Europe? I mean, you can short. The question was, how do you short the Europe? I mean, you can short EWG, right? That's Germany, or VGK. I mean, they're pretty liquid name, 3 million shares. Or you can go into futures, right? Futures is extremely leveraged. So futures, I would not advise unless you have a large portfolio and you can estimate, because you're just way over leveraged. So if I had to short the Europe, then I would use one of these ETFs. You could buy puts on these stocks. Fred, yes. The dollar will weigh on the FTLT. Welcome. Can you see the screen, FTLT? And can you hear me on the Discord? All right. So Fred, question about dollar. Yes, that will, the dollar is definitely going to weigh in on the market. I think it's overdone, right? It's probably trading in this, right? We had a strong rally here, pull back. You're probably trading in this final, wave A, wave B, wave C, right? So it's probably coming to an end. I still expect a pullback, July, August, probably, back to this trend line. But then I think then the rally will resume. But short term, it is bearish. Carmen, thank you. Murphy Oil, one of the monthly pick. I think it's going to outperform XOP, but so far they're all trading in very similar fashion. I still think market is extremely oversold, right? One of the bulls' argument is that all of the negative news are priced in, right? We already kind of priced in inflation. It looks like inflation is subsiding, at least in commodities prices, or reaching the peak. Everybody's already talking about recession. Everybody already talking about 75 basis points. So I think short-term market is oversold and due for a rebound, right? Kind of a rally in the bear market, But in reality, Spiders is actually behaving worse than it did in 2008 or 2002, right? I think this is like the worst 6 months since I don't even know, in the past 20 or 40 years. I forgot what the quote was. But we haven't had that big of a sell, that bearish sentiment and market in multiple decades. So, but every bear market always have rallies, right? It always does. So we'll see if, we already had a 5%. I think it was 8%. Right, so we had almost 9% rally. It could be that's the end of it, right? But it could be higher, right? It could be 14%. But for now, it's 9%. So the question is, will 372 level will hold? Will 360 level hold? In the months of July, I think it will. I think 360 will hold in July. probably 372, depending on the news, but we're gonna have ISM numbers in 12 minutes, so we'll just have to wait and see. So short term, you know, I'm bullish on energy, and short term I am bullish on technology. Thank you, Angelique. Thank you, Bob. You can definitely, right. The other way to short Europe is buy dollar, right? That's what a lot of people are doing, right? So UUP, right? You can buy UUP. It's not as liquid, 2 million shares average volume. Let's see, FXE. FXE is even less. So the problem, so you just have to look for liquid ETFs, but UUP, 2 million shares average volume. Volume is definitely dropping, but you know, this is one way to short the Europe is obviously buy a dollar. They'll be highly correlated. So if Europe drops, dollar will continue going higher. If dollar drops, Europe will rally. Fred, thank you. War since 1970. So I mean, 50 years, right? So the war 6 months in 1970. So that's probably a bullish argument, right? That's everybody's so afraid and so fearful now that the market needs to rebound back. It will at least recover some of the losses. PMI, so we have a PMI data come out. Doesn't look like it's a little bit lower. So let's look at the let's see. All right. Let me know if you guys have any questions. Discord users, go to webinar. Fred since 1970. Thank you. All right. All right, TL. FTLT, thank you. All right, good. All right. So let's look at the, well, we're gonna have in 9 minutes more news on ISM. So we'll see. All right, let's look at the watch list. So today materials continue to actually flat, right? Metals and miners continue to drop. One of the weakest sectors are again commodities and energy. China, again, additional lockdowns, again down 2%. Energy pullback continues to pull back after yesterday's sell-off. Utilities are up slightly, so safety classes, consumer staples, REITs, utilities are up. Retail pulling back, semiconductors pulling back after yesterday's reversal, consumer discretionary pulling back, banks slightly down. So you have XLK flat, work from home stocks are higher, and QQQ is slightly lower. And continue of yield inversion. All right. Let me know if you have any questions. Let's review the positions and see if we want to make any adjustments. So yesterday I did get into Delta Airline, announcing earnings in 7 days. So this is a short-term trade, right? Taking advantage of the volatility in the market. That's probably the most popular trade right now is, if you do see support in the market, you sell credit put spreads. If you see, overhead resistance, you sell call spreads, right? So, and you are getting a lot of premium in the option prices, right? Because of the VIX and because of the earnings. So Delta Airline will announce earnings next week. Next week, earnings season will start. Could be another catalyst for the market. I sold for 19 cents, 25 put, right? So Delta Airline trading at around 30, so 15% drop, right? 15, almost 20% drop. So if Delta Airlines drops 20% between now and next Friday, then this trade will go against me. So you can see these exaggerated moves, and you are still getting paid almost 1% for that 25 put. And that's not just Delta Airline, that's across, that's across all stocks. I mean, earnings, that announcement, that idea is even more exaggerated, right? So again, it will depend on the the 360 level will or will not hold. I assume if it will hold, then Delta Airline will trade higher. If it will not hold, then it will trade below 25 level. So it's extremely important to have the right position size. I encourage you, if you start trading options, don't trade more than one contract. Just remember, one contract, it might not seem like a lot, right? One contract, 19 cents, that's just $20. It doesn't seem like a lot at risk, but in reality, one contract is 25, right? It's 20, you take 25, you multiply it by 100, even if you have a stop loss, right? Or even if you bought a put, right? But you own $2,500, right? Even with one contract, you still own $2,500, right? I mean, if it drops to 20, right? If it drops, 30%, you are risking $500, right? So which would be more than 2.5% of your account value if you're trading $10,000. But that's the thought process. You're doing two contracts, you're risking $1,000. So for that reason, if you're new to trade in options, or if you have a smaller portfolio, just do one contract at a time, right? Especially if if the stock is $200, right? If you trade in Amazon, or you trade in, Google, you probably cannot do Google trade because you're risking more than $250. But if you trade in, even Amazon, just remember, $250 stock, you multiply this by 10, right? So now instead of $2,500 at risk, you have at risk $25,000, right? So that's how you would look at, either you're doing credit call spread, credit put spread, or credit call spread. But even if you're long a call, right? Right now there's so much premium in these calls, it's the same thing. If you own one contract of 25 call, you own $2,500, right? So that's the important calculation that I encourage you to do every time. All right, so I have a credit put on Delta Airline, taking advantage of the short-term volatility. IWM. So I closed the 190 call. I still have 180 call. So I have 180 call at this point. I closed the short call, but I do have a put spread, 160, 150 put spread, right? So because my thought process is that, again, IWM, it's retesting this downtrend, but maybe something like this, and then September, October retest of the lows. So I'm long with the calls. I'm also at the same time long with the puts. A lot of people ask me, why would you do that? Doesn't that negate the other trade? Well, if you think we're trading in the range, right, that the rally, the bull market is not going to resume, and the bear market has reached some kind of a, at least a bottom, at least short term for the next months or so, then you want to be long and short the market at the same time. Yesterday was a perfect example where, QQQ opened 2% down, and then it closed 2% up, right? So for that reason, you want to be long and short at the same time. Commodities getting this, Fred. Yes, commodities selling off. Thank you, Fred. Bob. UNG sold off. Looking interesting. Thank you. TJ. Yes, overall, I do think we're still trading in a bear market. Yes. So the question is, do I think we're trading in a bear market? The answer is yes. General Motor car in half over the last 6 months, recession is coming. Whether recession is coming or not, I think more important, how does the market think about the recession? See, definitely people anticipate, traders anticipate that the recession, we will hit the recession. Otherwise, we won't have the yield inversion and we won't have the charge. So whether we will or will not have a recession, stock market always looks ahead. So it doesn't really matter whether we will or will not have a recession. You know, by the time recession actually hits, market is probably going to find the bottom, right? So, but what's more important that more than half of the market participants think that we are going to reach recession in the next 12 months. All right, Carmen, I'll answer the question. Let me. Thank you, John. We're in recession. TJ, thank you. All right, John. We'll talk about stagflation for now. All right, John agrees. And synthetic stock versus triangle, different strategies, right? Different strategies. Let me review the positions. All right, so that's Delta Airline. We talked about IWM. Same thing with QQQ, right? I rolled 240 put, right? So September is, we're trading in July, right? So we have July expiration. We still have July or July, August, and September expiration. So there's still 3 months left. But at this point, I closed December 260 put, right? Took small profit in 260 put, rolled it in 240 put. Because by September, I'm not sure if the market will or will not reach 260 on QQQ by September, right? We are trading at all right, so ISM is 55.3 versus estimated 54. So looks actually looks better. Okay, so let's see, QQQ is turning positive. So we just had a ISM numbers. I think they are better than expected. Worse than the last ones, but better than expected. Yeah, 54. That's forecast. Yeah, so it's 55.3. 55.3. So ISM is better than median forecast, which is good. At least short term. All right, looks like QQQ turning positive on that news. Okay. So I closed the 260 put and rolled it to 240 put. Still overall bullish position, right? Because I'm short 280 put, right? I'm short 280 put. Ideally, I wanted to see it drop by half the premium. Sold it for $12. It's at $12.36. I've been trading around QQQ. Short term, I'm bullish on QQQ. So I'm waiting for the. It looks like we're posting new highs. 288. Next level is 295. At 295 probably trim this position, the credit QQQ put spread. All right, we have a lot of people on Discord. Thank you for participating. All right. So that's That's QQQ, still bullish on QQQ. So those are the only adjustments I did yesterday. Kind of expressing short-term bullish position. FCX, still on FCX. We talked about FCX, we talked about the support line. Doesn't look like bulls were able to hold on to this level, but again, I think copper is extremely oversold. This bear trade is overdone. I still think that, especially, the dollar is overbought. I still think that we can rebound back to 34, 36 level on FCX. So I have a stock position. I do have September position, so I do have time. I'm going to wait and see if FCX can stabilize. IWM, we talked about IWM, so still have that position. Also accidental. So in terms of energy, I did initiate accidental. It looks like it's outperforming the oil drills, but nonetheless, it's also down significantly. You do have a support 55. We'll see if that level holds. But again, I think commodities in general are extremely oversold. And I think they do have, if technology is going to rally, commodities will follow. Commodities will follow. SH, right? The one way to hedge your portfolio, if you're not comfortable trading options, one way to hedge is SH, right? Angelique asked, how do you short, Europe? How do you short the United States? You buy inverse ETF, right? You buy inverse ETF. If you're not feeling comfortable shorting, most people are not comfortable shorting. They only like to buy things. So then you buy inverse ETF, like SH, right? And as long as the market is going to continue going lower lows and lower highs, SH will continue going higher, right? Spiders is flat, SH is flat. So they're trading inverse to each other. And we talked about XLK and XLP. So still have XLK's option spread position. If you're not comfortable, looks like XLK is actually up 40 basis points. And XOP. So long XOP, long XLK. Karen, why there's an active trader, why there is such difference between strategy A and strategy B, right? So for active trader, again, you have two different LLY, right? You have two different entry points. One is 315 and one is 327. Why such a big difference? Well, because the market is volatile and we're using stock forecast toolbox, right? So if you took an LLY, the predicted low is 315. So that's why we're suggesting that if you want to be conservative, wait till 315.59, right? Especially if you see market down like yesterday, 2%. Most likely 315 will be reached. LLY is up today. So the other choice is previous close, which is 327.18. So those are the different entry points. One is strategy B. If you see that the market is flat, like it was today, going into the opening, most likely we will not reach 315 in LLY. So then you enter at 327, right? So you look at LLY, you do 1 hour chart, right? So 8:30 market opens, you buy at the market. I would still wait. This is day trading. Active trader is a day trading. So I would wait for 3 candlesticks, right? It opened, rallied up, second candlestick, third candlestick. It dropped to 326, right? Suggested entry point is 327. Then I would enter at 327, right? And then at 3:30 you would exit, right? At 3:30 you would exit. So that's the difference between strategy and A and B. And you can hover over, you can kind of look at the pre-market futures. So you can look at the pre-market futures. If you see stock market is flat, usually first 15 minutes I would not day trade, right? Because a lot of institutions coming in and you can have volatility. You can see it, it was as high as 330, dropped to 327. So you wait 3 candlesticks, and then you have suggested entry price, right? 315 probably not going to happen today. Right, but yesterday's close would have been a good entry, right, around 327. So Carmen, hopefully that answer your question on active trader. TJ, thank you. John, thank you. So that's synthetic stock versus strangle. There are different strategies, right? Synthetic stock, basically, this is your profit loss chart, right, for synthetic stock. For strangle, the stock has to trade in the what's the profit loss on strangle, right? It only if it, if it stays flat. Strangle. Oh, so strangle. So you're making money if the stock is trading in a range, right? So you're making money if the stock is trading in a range. Right, so you're kind of this, right? So the strangles, you have different strike price, right? This is a profit, and these are the strikes, right? So for XOP, if you're doing strangle, let's say you did 120 and 100. Right, so on strangle, if you have short call and short put, you're losing money if it drops below short call and short pull. So strangle are market neutral strategies. Synthetic stock is directional strategy. Right now, the most favorite are directional trades, right? Directional trades like Delta Airline, right? Delta Airline, for now, it's market neutral strategy, right? As long as I can sell call spread probably closer to the earnings, but as long as the stock doesn't go higher or lower, then I'm making money, right? So that's selling call spread and put spread. Market kind of digesting ISM numbers. Now it's gonna wait for the Fed meeting notes. So far, QQQ slightly higher, Spider slightly higher. So kind of again, market is looking for direction. Yields did rally. Yields are stable. That's good. See, that's a new pattern. When you have better than expected economic data, yields will rally, and worse than economic data, yields will drop. But still inversion. Okay. TJ market does look ahead. 6 months, 12 months, but it does look ahead. Carmen, what's the best strategy? I think the best strategy is selling out of the money options, right? So whether it's a Delta Airlines selling 25-20 put, or QQQ selling 280 put, right? You can do calendars, right? Calendars could be also effective way. If short term I'm bullish, then I'm selling September 280 put, but longer term I'm bearish, so I went into December and bought 240 put. Basically, I think by September 280 level will hold, right? So my thought process is that right? But my thought process is by September, this 280 level will hold, right? 280 to 70 level will hold. So if that's correct, by September, then I'm selling out of the money put spread. And then once it rallies, let's say to 310, and I don't think it's going to go any further, then I can sell, let's say 320, 340 call spread, or 330, 350 call spread. But that's the strategy. Selling out of the money premium, depending on the portfolio size, right? Because Delta Airline, again, I'm investing $2,500 in QQQ. I'm investing $28,000. Excuse me. That's the difference. Any questions on Discord or GoToWebinar? Leveraged ETFs, John, I don't like leveraged ETFs, but single inverse ETFs like PSQ, right? For NASDAQ, it's PSQ, right? That makes sense. Albert at XOP. I have FCX. FCX is going to move higher. XOP. If copper is going to move higher, oil is going to, they'll move in tandem. So I prefer not to add because I'm getting close to this 2.5% stop loss. So I'm not gonna add. I want to see it at least getting stabilized. So I personally would not add because you don't know where the bottom is. So far, it's still kind of in a free fall. Thank you, Carmen. Do you use synthetic up? TJ, I do use synthetic. So synthetic stock, if I want to leverage, I would use synthetic stock because margin requirements are only 20%, right? On stock, it's 50%. So, if you want to leverage, then you can use synthetic stock. TJ, yeah, so that's the Delta Airline. That's my Delta Airline position. Right, if you look at the Delta Airline, I sold 25 bucks. You get 18 cents. QQQ and PSQ, Carmen, is triple leverage. So I prefer not to trade triple leveraged ETFs. Right, QQQ is up. I don't even know what is it up. 20 basis points. Well, it's still not. So I prefer not to trade triple leverage ETFs. I would rather do options or single ETF. Albert, thank you. TJ, thank you. All right, any other questions? It's 9:16. So we have, what do we have? We have FOMC meeting notes after lunch, right? This is Eastern. Job openings, ISM numbers. Let me see this get up there. Not yet. So I saw nothing better than forecast. I'm not sure what the job openings are. We do have FOMC meetings. Not sure if that's going to be any. You have Jan Pilar speaking tomorrow, so that could spark volatility. He's usually hawkish. And then we have unemployment rate. So probably Friday's unemployment numbers again can potentially spark volatility, right? And again, if unemployment is 3.6%, wage pressure, that could be kind of, again, fear of inflation. If all of a sudden unemployment jumps to 4%, then it could be fear of recession. So you don't know how the market is going to react. But market is oversold, and in theory, any neutral news or market positive news, market should continue its rebound. For now, it's kind of nobody wants to take any large positions. All right, that's all I have for today. Thank you very much. Welcome new Discord users. Thank you for participating in the live stream. Next one will be on Monday. Let's update this. Okay, next live trading will be on July. What's Monday? July 11th. July 11th. All right, so thank you, Discord users. We'll see you Monday. All right, and thank you, GoToWebinar users. Right. ARK is hanging in there. Right, the fact that ARK is, well, it's still down. I would look at the ARK, you look at the high yield. They are outperforming. I mean, it's facing a lot of overhead resistance at 40 at this level, but it did break this downtrend, at least short term. So that means there is appetite for risk, right? High beta stocks, short term. So this rally, I think, can continue. I mean, obviously, I don't think this is the bottom. So I think at some point we will be lower than this support. But short term, we could, if QQQ is going to rally and oil is going to rally, ARK will rally, and it looks like ARK is leading. Till yesterday we see this large volume, now facing overhead resistance. Carmen, thank you. Albert, thank you. TJ, thank you. Faust, thank you. Today is what? Scott? Today, the closing bell will be done by Scott. Scott will do a closing bell today. Energy is falling out. Fred, yes. I think ARK is the argument for short-term rally, which we've been patiently waiting for the past couple of weeks. Thank you, John. All right, take care, guys.